This is Alan Farley from FX Empire. Let's take a look at Tesla. Tesla so far in 2020. The stock broke out to a new high at the start of the year, reaching up around the 200 level on a split adjusted basis, and then sold off during the pandemic decline. It recovered very, very strongly, coming back to that prior high and breaking out in June, entering this very strong momentum fueled uptrend. Now, the rally initially topped out around the 350 to 375 level, and then it pulled back and consolidated and took off one more time, reaching above 500 just one day after the 5-for-1 stock split. Now, take a look at this symmetrical triangle pattern since that time. First, the stock split generated a sell-off, then Battery Day generated a sell-off, and now third quarter delivery numbers have generated a sell-off. This is all part of this five-way pattern, which could reach the 360 to 375 level once again in coming weeks. Now, what happens after that's very important, because if there is a breakdown, well, there isn't much support till we get back down here to the 250 level or so, and there's a couple of unfilled gaps right around here that could get tested in a steep decline. On the flip side, if the stock finally clears sort of the 425 to 450 level, it could take off, test this high right up here. Now, there's plenty of volume support because odd balance volume, which measures accumulation, just keeps hitting new highs within this pattern, so that's very bullish. However, we're getting a lot of sell the news reactions to news. And the stock is going to be reporting earnings at the end of the month, and I think it really is going to have to exceed those expectations in order to take another rally leg and to avoid trapping sort of overly complacent bulls who have had their way so far for the stock in 2020.